Hello everybody, welcome to Monday Morning Must-Knows. My name is Merlin Rothfield. Here are three very important things to pay attention to for the upcoming trading week. Now, of course, the inflation talk has gotten everybody really excited. Now it's turning to interest rate, and that, of course, leads to bond markets, which we're going to get to in just a second. But I want to start things off with, of course, the earnings calendar, because there have been some big names reported, and there are a few big ones this week. Let's take a look. Start things off on our Monday. You do have a few to speak of. You have Occidental Petroleum. You have Workday. Now, there's 897 companies reporting this week. Obviously, Monday, a very light day. Moving on to Tuesday, you have Target, AutoZone, Ross Stores, Kronos, and Hewlett-Packard. Wednesday brings you Salesforce, Lowe's, Viva Systems, Kohl's, and Neo. Thursday brings you Macy's, Costco, Best Buy, Marvell Technologies, Kroger, and Dell. And Friday, well, we've got nothing on Friday, so we'll just leave it all alone. So there's your companies reporting this week. Again, 897 of them to be precise. Now, as the Fed keeps talking about raising interest rates, that short end of the yield curve keeps rising. And of course, if that happens, most likely the long end of the yield curve should start rising as well, which brings up our next topic, which is going to be the bond market. Now, of course, as traders, we should look at the bond market every week. It's critical to what happens in all things financial around the world. So why is this one so important this week? Well, it has to do with the United States bond market. So let's take a peek at the 10-year. What we're looking at here is the 10-year yield, not the price of the bonds, but the yield going all the way back into the 1980s. You can see back in the 80s, we were looking at about 16%, way lofty valuations there for that 10-year. Now, of course, the housing market is tied to the 10-year in the United States, which means as the 10-year goes up, so do 30-year fixed-rate mortgages. And we'll look at the trend here. It's been absolutely incredible since the 80s, just going lower and lower and lower and lower and lower. Now, if you follow core strategy, you understand the concepts of trend breaks, and you can see right here on the hard red edge, we have now broken above and made a interim new high. Now, we retested it last week, and the question for many is, are we going to go higher? Are we going to see that 5, 6, 7% yield for that 10-year? Now, remember, the higher that number goes, the more likely you're going to see pressure on the housing market, which, of course, is already under a little bit of pressure. Now, how do we know about the housing market and what to look for? Well, the good news is we have 3 announcements happening this week, so we can start there again and look at housing data. Start things off early in the week. As you can see, pending home sales coming out Monday at 10 a.m. Eastern Standard Time. Moving on to Tuesday, you have the S&P Case-Shiller Composite 20 Home Price Index coming out at 9 a.m. on Tuesday. And at the same time, you have HPI numbers, which both give us indications as to home price valuations. Are we seeing those prices increase significantly, decrease significantly, or just traverse sideways and remain right about the same? So this week, it's really about earnings, a little bit about the bond markets, and really, I think most people should understand the ripple effects and how that bond market is going to impact the housing markets going forward. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.